Okay, thanks. So this is another 40-minute session. After this, we have a lunch break. So we're going to jump right into it. I'm going to introduce our panelists, and then if you guys could tell us a little bit about the areas you were working in. When we structured this session, we wanted to look at a few different layers of exchange. So John Booth is the CEO of Midpoint, which is very much doing peer-to-peer exchange for Forex. And then you take that up a notch and sort of over to like the corporate world, and you have on the other side here, John Edge, who's an advisor and shareholder with the NSX, which is an equities exchange in the United States that is going through an incredible transformation right now. And then up to the institutional level, with regard to Forex, we have Scott Moffitt, who is the COO of LMAX Exchange, which is one of the largest Forex exchanges here in Europe, and an exchange that also trades VEN. So guys, thanks very much for joining us. I think it would be great if you could tell us just a little bit about what your businesses are doing, and then we'll go into some questions about the idea of like the evolution of exchange. We just heard on the last panel that some people think that with blockchain technologies, costs will fall towards zero. This obviously has an impact as an idea on exchanges, but you're all working very efficiently to drive costs towards zero for your clients. So let's hear what you're doing and how you're doing it. Let's start with John.
Okay. Midpoint is a peer-to-peer currency platform or marketplace. So we don't take a principal position, unlike traditional banks or brokers. We just provide the facility whereby people are able to be networked. And we have a US patent on the way in which we network people on a multi-party, multi-currency basis. So as a result of that, we're basically an asset-light platform. So you think about Uber, who's not owning taxi cabs, and Airbnb, that's not owning any real estate. Well, we don't own any currencies. And so we've bifurcated the actual marketplace from the payment system. We're integrated with a company that's actually listed here in the UK called Earthport, which has an outsourced corresponding banking network that we're able to use from the standpoint of moving the actual, affecting the actual payments. But essentially, we put in place the marketplace where different currency needs can all come in and be netted together.
And so the exchange is trading really Forex and for consumers, right?
It's sort of higher value consumers, small, mid-sized enterprises. Our average transaction size is sort of 20 to 24,000 pounds.
Right. Okay. Great. How many customers?
It's been going 7 quarters here since we reversed it into a public shell in Canada just over 2 years ago, and we've got about 550 customers on the platform at the moment. But We're a public company, so I've got to be careful in terms of forward-looking statements. Got it.
Scott, tell us about LMAX.
So LMAX stands for London Multi-Asset Exchange. We are the first fully regulated MTF, so exchange light for spot FX. We've essentially brought the exchange model to a traditionally OTC traded product. We won the Sunday Times fastest growing tech company last year, and we have matching engines in Tokyo, London. We're going to be launching in New York in Q3, most probably this year. And we currently have customers in 80 countries. We also have a broker attached to the exchange, of which we have approximately 9,000 customers.
Right. And trade daily volume these days?
Daily volumes are about 10 billion a day we do at the moment, so 200 billion a month. We hope to certainly grow that to about 300 billion a month by this time next year. And we also, I should mention, we also list VEN as a derivative. A dollar VEN is listed on LMAX.
Right. Yeah, that's where the bulk of our volume is happening. Yeah. John, tell us about NSX, because big changes, right?
Yeah. So the National Stock Exchange is a 125-year-old equities exchange in the US. So NASDAQ, NSX, New York Stock Exchange, ICE. It's actually an interesting comment there where you use the word matching engine, because I think for the audience, the holy grail of any exchange is matching liquidity in whatever asset class that you're in. So this comment here on a matching engine, which is a piece of technology that matches the buyers and sellers, is a key function of a successful exchange. There's lots of other things around it. I've been involved in disruptive innovation in financial services and capital markets for almost 20 years. Built the first automated market making business at Lehman Brothers. So we've got a group of people who've been building core technology to disrupt markets for a long time. When you look at equity markets, and it's interesting when you put it in the concept of is Bitcoin a currency or an asset, and how you're trying to match liquidity, how do you try and match blocks. How many people have read Flash Boys? So it's a great book, it's very entertaining. So Flash Boys talks about the manipulation of prices based off unfair access to liquidity. So we've looked at this for 8 years or so. So having run high-frequency trading within a bank, you're fairly familiar with how high-frequency trading works and how you make your money. And there is an aspect of equity markets that's broken. So the National Stock Exchange has a medallion license, and this is a key point as well for the general conversation. An MTF license is very useful as well. The regulatory license is a real pain in the neck to get, and it's very expensive. NSX went into administration a year ago, and at that point the medallion becomes available. If you wanted to get a SRO, SEC authorized national exchange in the US from zero, you're talking a lot of time and a lot of money. So when the NSX medallion came up, our group looked at that opportunity to take a 125-year history and a medallion of the right to trade and the compliance stack, and then bring in new technology.
So are you rebuilding the stack from scratch?
It's a brand new stack. So there's a whole new stack coming in, which is a completely different model on a traditional exchange. So it's a venture business, by the way. If it works, great. If it doesn't work, well, it doesn't work. And I say that plainly because, just to put it in simple language, this isn't a traditional exchange where we're going to buy it and just drop the prices. It's putting in a brand new matching engine. And the matching engine is a patented matching engine. And the matching engine is, and this is a bit, I'll close off the introduction. The matching engine works like you'd share photos on Google Circles. So this is institutional equities. So I'm BlackRock, and I'm trading billions a day. I have to trade from an asset manager to a broker to an exchange and back out again. The problem is in the middle, there's a lot of friction. Now, what I really want to do is, because GLG were here before, I would ideally like to trade directly with GLG and have myself matched at a lower frictional cost of matching, which creates a peer-to-peer network within an institutional equities market.
Now, for equities, so some people may or may not know, certainly in the US market, I'm not sure exactly how it is here, if to actually clear, you need to go through the DTCC, or basically there's one institution that really is holding the ledger. I was with a big bank a while ago, and I won't say which bank, but they were saying that there's a lot of fear within particularly the DTCC and potentially the SEC around smart contracts, because if you start distributing the contracts for equities or other types of securities, they wouldn't run through the DTCC, so you wouldn't have a master ledger anymore of who owns what, and there was a lot of fear around that.
Well, it's really interesting. So, and again, I like the audience interaction piece. Who knows Blythe Masters? Who knows who Blythe Masters is? She's potentially one of the most powerful people in capital markets, and she's got to be top 5 most powerful woman in capital markets. And she recently just left to join a project called Dash. And Dash is a blockchain project which is building an alternative to DTCC. And that has been invested in by a group of big banks to go after that exact problem, to give an alternative to the DTCC that can include these capabilities. So the fact that Blythe left her role at JP Morgan and is now working in a small blockchain company is sent enormous ripples around Wall Street, as in, holy crap, this blockchain stuff must be important, because she's very, very smart, and she's now moved to work on it, and it's to go after that problem.
Interesting.
And the SEC are talking to that group to learn how they're going to solve the problem to create the capability.
Right. So we have 3 types of exchanges here. We've got equities, we've got Forex, and we've got sort of people moving money. Let's go back down to the people again.
Sure.
How do you see your business evolving, and are you looking at blockchain technologies as a way to lower the cost of exchange, and how do you foresee the two working together?
Okay, so currencies are unique among asset classes, unlike equities, where you have to sort of rebase yourself back to a currency of some sort as you're buying and selling your other asset. Currencies, you're implicitly a buyer and a seller at the same time. And the function of that, or the effect of that rather, is that you can then have a multi-party match. So in other words, we don't have to just have a bilateral match, sort of your GLG BlackRock example, but we can have yen goes to Swiss, yen goes to Swissy, goes to sterling, goes to US dollar, goes back to whatever I started with, right? So in other words, yeah, exactly. Well, but the possibilities are limitless. So our matching engine actually looks for two-way matches, but also three-way matches, four-way matches,
so you can aggregate the match.
So we can aggregate the matches, and we can aggregate them not only on a multi-party basis, but on a multi-currency basis. And so that becomes very powerful in terms of solving the liquidity issue at scale, and therefore allowing greater spread compression or pricing compression, which goes to what you sort of started. Exactly, which goes to sort of how you started the session. Speaking specifically to how we see the business evolving, yeah, we're very focused on a niche space, which is that sort of SME market, which we think is a very, very poorly served space in the international payments area. It's a space that is tough to get to, but through various channel partners, we think we have some good strategies to get there. In terms of getting or using rather blockchain technology, I mentioned earlier that we had initially bifurcated the whole marketplace from the payments. And the reason we did that is payments haven't been innovated in 40 years. International payments haven't been innovated. And we see, at the moment we're integrated with a company called Earthport. They are going counter trend in that most large banks are closing down their corresponding banking networks. Mm-hmm. Earthport's building theirs out. They're still losing money. They're still, they're not venture backed, they're public, but hopefully one of these days they're getting to the stage where they'll probably turn a profit. But it's a very ambitious project that they're currently embarked on. That's our interim solution, or that's our current solution. That works for us right now. But to the extent that, and
does that help you outprice your competitors?
Yes, but also speaking to Ripple earlier, so we've introduced Ripple to Earthport, and Ripple's now done a deal with Earthport underneath Earthport. So we see blockchain as something that could potentially be something we use over time, but at the moment we're locked in on our segregated trust accounts because our clients don't have to pre-fund. We don't, nobody takes counterparty risk on us. We're an asset-light model. We're just the marketplace.
And I mean, there's some argument that you could have multiple, say, rails, right? But it sounds like if you guys are integrated with Earthport, the Earthport Ripple alliance is fairly well publicized now,
yes.
And there's a lot of talk about that. So that really kind of will align Midpoint towards Ripple over time, potentially.
Potentially.
Yeah. What about you, Scott? And I'm really curious, particularly with the exchange, LMAX has been really highly lauded for its application of technology in the exchange market to not only drive down costs, but to improve the liquidity pools that clients are trading with. Tell us about how you guys are doing that and what's on your technology roadmap.
So yeah, we have. I mean, in the foreign exchange market, it's behind the equities market in terms of matching engines, speed of matching engines. Equity, there was a race to the bottom. You had to be very, very fast. Hence the Flash Boys comments. The trade happening here can happen there in an instant, and someone can get an advantage. Forex is heading in that direction, and we're the fastest matching engine in the FX space today. We're not as quick as equity exchange, but that's where it's heading. So we're giving customers. So we got 60 technologists, and we invested over $80 million in our technology. It's all proprietary, and we've won awards for it. So that's our kind of USP in the market, because for banks traditionally trading Forex OTC, what used to be over the telephone or with last look because they get optionality, they come to LMAX in a traditional exchange model with no last look like equities are trading, true marketplace. They're terrified because they don't have the optionality, and they get hit and they might not be quick enough. So we've provided them technology to cancel in place very, very quickly in the Forex space. So, the whole HFT argument, a lot of the banks nowadays, they're far ahead of where they were 10 years ago. They've caught up their HFTs in their own right because that's the marketplace at the moment. And I mean, for us, the future, we're looking at different matching engines, hence Tokyo and New York. We're looking at different asset classes. So we'd like to move into perhaps futures, options, digital currencies. We're looking for opportunities in that space. So we address all three sectors of the market. We've got an interbank platform where banks, it's a boys' own club. They trade with each other and they like it because they don't like the flash boys. Then we have an institutional marketplace where we'd like to get the previous panel up here to discuss trading on our institutional platform, which combines those two players. And then we have a professional platform, which is because we back-to-back every trade from our broker, we're giving peer-to-peer people guys sitting in this room the ability to trade against Goldman Sachs in euro-dollar. So we're addressing all three markets, and that's kind of where we see the future, giving whoever you are, a euro-dollar is a euro-dollar is a euro-dollar is a euro-dollar, and you should be able to trade it at a certain price, rather than having to go through a load of intermediaries just to be able to trade euro-dollar, basically.
I want to come back to your developments in the U.S. and your plans for the U.S., but John, you mentioned a minute ago that the NSX a year ago was insolvent. Today it's getting like an entirely new engine put into it. When is it going to be back up and running?
So there's a variety of steps that you need to, as an SRO, it's taken very seriously as the short version. So when you take an exchange offline, taking it back online, there's a set of steps to go through. And that's a process through this year. So I think it's going to go Q3 into beta. But you're reconnecting institutions, and interestingly, you see, and it comes onto a different topic about market formation. Because I had a conversation about reference prices on Bitcoin. So you speak to somebody and they say, yeah, we're going to convert your Bitcoin for dollars. You go, great, where's your reference price? And they go, oh, we just go to Bitstamp. You're like, but where's your reference price? In Reg NMS, you need a reference price. So I mention that because when you've got the feed handlers between the exchanges that maintain market price, if you're going to bring another exchange online that maintains part of market price, you have to do it very carefully. And that touches on a second aspect, which is really important for exchanges, that is something that I don't think a lot of people are seeing coming, which is Reg SCI. So Reg SCI is a new regulation put in place to oversee exchanges and the operations of financial technology. And it followed the breakdown of the SIP at NASDAQ about 18 months ago. And that's the feed handler that pushes out the prices. But that breakdown went down for 3 hours, so there was no US market for 3 hours because they maintained price between the exchanges. So to answer the first question, NSX comes online this year, but you have to be very careful about how you bring a national exchange online. The reasons that you have to be careful are release of technology. So Reg SCI is very painful. So anybody in the Bitcoin digital asset space who's thinking of doing an exchange and is thinking of bringing it online like an ATS or an MTF, and it's not here yet, but in the US, you're going to run straight into Reg SCI. And the regulatory costs for running a licensed exchange in the US are very high, because every single technology change that you do, you have to document physically, every release. So you can imagine every single change that anybody makes in these high-tech businesses have to be documented, then ready for inspection. Interestingly, does anybody know any technology that's really good at storing things and proving them as a fact, so that when you turn up at some point in the future, you can, no, I did that. I mean, if anybody got any ideas, Joe Lubin's probably got a few ideas on that. But there's a whole, you start to see all these regulatory burdens.
They can be solved, yeah. I think it's a good moment to bring it out to the audience. Do you guys have some questions? In the back there?
So it's great to finally hear somebody mention the R word, which a lot of people seem to overlook in relation to all this excitement around the technology and creating a new currency. How do you guys see regulation proceeding from here on in?
Well, from our perspective, when we made a commitment, or certainly showed willing in the digital space with the listing event, we got a lot of inquiries from all different parts, a lot from the Bitcoin world, the storage, the people looking to market make, whether they could cut and paste our exchange technology to launch a Bitcoin exchange, or whether we could, and mainly, list Bitcoin on our exchange. It's really difficult because, for my sins, I also happen to be the MLRO at LMAX, and it's a very difficult hurdle to get over for an MLRO, knowing the risks I could potentially take to list Bitcoin without the whole transparency KYC. It's just a difficult hurdle to get over. So our preference at LMAX, if you ask me, my preference at MLRO is we're a technology provider. Cut and paste our exchange, and you deal with the regulation, because I'm not that comfortable with it. And that's just an honest opinion. Maybe in a year's time, I'm sure there's plenty of Bitcoin people here who tell me I'm mad, but at the end of the day, I'm the person who's sitting in the risk seat. So you've got this completely unregulated product, and we're in the middle trying to bring it in a regulated environment. That's the real attraction, because, you know, they see the MTF regulated license, FCA London, and it's just perfect place for Bitcoin to be listed. But we have a lot of regulatory hurdles to get over before we feel comfortable with that. So I haven't really answered your question apart from saying it's a difficult hurdle. But it's not one that we're putting our head in the sand. We're looking for advice. We've gone to lawyers. How can I, as MLRO, and us, LMAX, as a compliance regulated FCA company, how can us, being compliant, get comfortable with it? So it's not to say we could never get comfortable with it, but we're just not comfortable with it now, that's all.
I think, so this is kind of a favorite topic for me, because the last company that I sold is called RegKite, which is a regulatory technology company. So I left JP Morgan to found a RegTech company. You don't want to be an MLRO. It's a nightmare of a job, because you get in a lot of trouble, personally, if there's an issue.
Sure.
So the problem is anybody running an organization who's in the position here can't take personal risk unless the regulators give the guidance on how to deal with it. So I think number one point is the FCA Innovation Hub should be lauded. It's the first of its kind in the world, and it is actively engaging with entities that are looking at dealing with digital assets. I'd also say at the same time, there are various organizations that are working in various places to deal with it. In London, we have an established think tank that's working with the FCA, the Bank of England, the Treasury, and the Cabinet Office to establish 4 types of company to start breaking apart the perceived risks. So a technology company is a technology company, but as soon as you're entering into any form of transaction, then you have to know the beneficial owner under current regulation. So therefore, it's not going to happen until that gets transformed. So you're either going to change the rule to say, we don't mind not knowing the beneficial owner, or the beneficial owner has to be known. Otherwise, you can't take the risk.
No, that is the big problem.
How about you guys?
Well, from our standpoint, we have chosen to be regulated. We don't actually touch any money. So we created a marketplace where people can essentially exchange their obligations internationally. But the settlement of that is done through our payment provider. So this comes back to the whole bifurcation concept. But we also took on board very seriously the whole concept of where regulation is headed. We think it's just going to get more and more onerous over time. My background years ago was as a lawyer. I've been a compliance officer previously and a couple of other asset managers. So I'm intimately familiar with the sort of the encroaching sense that regulation is coming. So we chose to actually go and get authorized here in the UK under the FCA as a payments institution, and that gives us a compliance passport across the Eurozone. But I would argue as a lawyer, we probably don't need to be regulated. But because we see AML and KYC as critical components of our overall business, and we see those as actual, onboarding clients as one of our core competencies, unlike some of our other competitors in the peer-to-peer space who may be outsourcing that, we've chosen to sort of head down that route and embrace it.
Right. I think this regulatory question brings on an interesting kind of positioning question about London. And we are here at Bloomberg London, and I think there's a little bit of competition still between New York and London about dominance as a financial center. And a lot of that perceived financial dominance comes from where exchanges are located. Scott, you mentioned that you guys have globalized out. For the three of you, why are you in London? Do you expect that you'll stay in London? How does London compare?
Shall I go first on it? Okay. Yeah. We made a very conscious decision to come to London. We were a .com in the first round. We were seed funded by Thomas Cook. We started out of Bermuda in 1998, 99.
We're based in Bermuda.
We got live in 2001 in Toronto and in Washington. So we were live originally, the original sort of peer-to-peer exchange, albeit in only 2 currencies at that time. And it was rather challenging from a North American perspective for a lot of reasons in terms of actually physically moving the money. And when the opportunity to work with Earthport came up, them being based here, we started looking at what the sort of the overall innovation support that is happening here in London, as well as the fact that you know, FX traditionally has been an unregulated asset. Spot FX is internationally unregulated, but there's an increasing push towards regulation everywhere. We just thought London, being the sort of central hub for spot FX generally, would be a good place to be. Now, it's also, over the last few years, been a great center for fintech. So from our standpoint, being based here, we're listed in Toronto, we're listed in Frankfurt, but we're actually based here.
Right, okay, Scott?
Our story is slightly less exciting, I would suggest. London for us was twofold. One, that's kind of where the business was based. To set up an exchange, you need liquidity providers. Liquidity providers in the bank world, in the foreign exchange world, are London or New York. We were based in London, so that made sense for us to open in London. It also gave us, the point you just touched on, access to high quality developers in terms of, because our matching engine is proprietary, we need access to the top, you know, guys coming out of Oxford and Cambridge doing masters and PhDs. So it was kind of a natural place to start. And then our expansion of exchanges has purely been based on customer demand and future growth of the business. 30% of our business is coming from the Asia region. We invested in opening an exchange in Tokyo. Tick. Now we're looking to make a big play in the institutional space, that kind of middle section. And to be honest, it's not London, that's New York.
That'll be New York.
So that's Q3 this year. So it's kind of guided by our customers and future opportunities.
So Q3 New York, where do you see the US side of the business in a year? Where would you guys like to be?
In a year from launch in Q3?
Yeah.
If, you know, hopefully it works. If it works, we'll be doing multiples of what we're doing in London, because that market's enormous. I mean, LMAX at the moment, we've only really addressed probably two parts of an enormous market, the interbank market and what people consider the retail market, but we access the retail market via brokers, and that's probably only 30%. You've got this enormous chunk of true institutional market, your flash boys market, your high-frequency funds trading with banks day in, day out on incumbent technology, which is not transparent, slow, produces market data every 150 milliseconds rather than streamed like us, is just archaic in my opinion. So we're going there and we're saying this is the future. We've kind of proved it in London. We're going to New York. You guys have asked for it. Here it is. Let's go. So that's kind of
awesome. And then John, you guys are in New York?
Well, I think you could decouple it, because again, when we talk about the matching engines, you've got technology and regulatory arbitrage. So the regulatory arbitrage will go on around the world. Interestingly, Singapore is getting ahead of London currently in the standards for digital. So Singapore's machine is moving quicker on establishing standards, which is very interesting as to, and China's following, on what the ISO standards for the digital assets. Whoever starts to print those first.
Digital assets, you meaning digital equities? Or
Yeah,
like,
digital assets full stop.
Yeah, okay.
Now, so you got regulatory and technology arbitrage, because I knew some of the guys who went over to build your matching engine. And so what that was technology arbitrage, as in old technology, we're going to put new technology in. On the regulatory arbitrage, the NSX takeover was a regulatory arbitrage play. It was an access to a regulatory license. Now, I'm a shareholder of NSX, and I have other investments and projects, and they're all pointed at London right now because of the FCA Innovation Hub, because that's completely differential. And there is, I can't talk about it yet, but there's a big Bitcoin blockchain name that's moved to London. And it moved to London.
Does it start with a C?
No, don't dig. It moved to London because I spoke to the chairman and I said, and it's somewhat, Ethereum went to Switzerland and I'm passionate about London. So I rang the chairman up and said, the FCA has this lab, I'll get you on the phone with the FCA. And he said, the FCA are never going to listen to us, and they will. And they had a very engaging phone call and a series of phone calls, and they ultimately decided to set up here. So that London's regulatory arbitrage play is currently winning. Singapore's next, I believe.
Interesting, very cool. Questions?
So
Renee.
I want to follow up with the jurisdiction thing. This is a slightly complex question, but I'll try and get this clear. So we've got very odd stuff happening in a bunch of jurisdictions right now. Pirate Party is polling as the single largest political party in Iceland, about 30% of the vote. Greece is obviously in a very radical configuration, particularly if they wind up outside of the euro. So what happens if you have extremely trustworthy technology along the lines of blockchains and the rest of that kind of financial crypto side of things, operating exchanges and markets and the rest of the infrastructure in jurisdictions which are basically broken with the existing global financial order? Do you think that's a credible future? And if so, how do you think it might play out?
So I can answer that question with an example of trade finance. So if we look at trade finance, it's a gigantic opportunity for blockchain. Because trade finance, there's 4 wirehouses you have to be nice to. And if you're not nice to the wirehouses, they switch you off. So if you're in Ethiopia and you're running a bank and they think you've got an AML issue and you've got a local industry making handbags, you can't sell your handbags internationally because you can't get the money in and out through the wire system. So I think the first answer is you just get switched off. The second answer is, if I don't want to be switched off, how can I switch myself back on again? And that is it's a very, this is changing world order type stuff. If a country decides to go, we'll actually trade with the world, and if we can't go through the central trade finance system, we can regulate a bank ourselves. And then we can create trade partners ourselves. So I think it's going to be very interesting what happens with the wirehouses.
I'll pass that in. It's nothing really to add on that, if I'm honest. I think you're right in terms of the world changing. I'm just unsure how close it is.
I've got, pie in the sky as to how it goes on, but day one, if somebody spins something up that breaks AML, KYC laws, they just get cut out of the system.
Yeah.
The question there is, all right, if I'm cut out of the system, do I go back and apologize and be nice and put my dunce's hat and sit in the corner for a bit? Or do I go, sod it, I'm going to build one myself, and who wants to trade with me? And the interesting thing is then, if you put that flag up, the technologists and engineers, reference the 16-year-old kid mentioned in the last one, will pitch up in Greece and go, I can build this for you if you pay me.
Last question, because we got to wrap up, and we're going to have lunch here in a minute just outside. But I'm curious about how deep are the moats for exchanges? So, there's a lot of things that go into making a market for an exchange, and you guys just outlined why you're in London or why you're in New York or Tokyo, why Singapore is interesting. There are a lot of markets in the world and a lot of places in the world that would love to have a piece of the financial services pie, but can't. Blockchain technologies potentially level that playing field to enable previously viable partners or entities to be able to spin up something. How likely is it that that can happen for the exchange business, and who's most likely to be the dark horse?
I'll go first because I think mine's the easiest one. Equities, secondary markets are there to serve as primary markets. So you get big companies IPOing, and the secondary market and the shares are traded on an exchange. So the liquidity of where people allocate to equities and trade is correlated to the size of the companies that IPO and then list. So New York's massive because American companies list there. If the American companies all left and went to Botswana and registered in Botswana, the Botswana Stock Exchange would be massive. So it's a function of actually the market structure. So that's an easier one. That's not a technology issue. That's a question of where your primary market is and where your secondary market is.
But does that mean that China has potentially a role to play here?
Well, Alibaba is very interesting. So you're familiar with, so very quickly, Alibaba listed a Cayman derivative because the Chinese authorities said that they couldn't issue common equity on a US exchange. So they created a Cayman derivative and listed the Cayman derivative on the exchange. It's all very interesting. So and that's another 2 hours of conversation on that, but how Chinese markets evolve, it is based around the size of the primary market. So it's not a technology move. Now, how Alibaba listed via a derivatives contracts, that's a market structure and regulation conversation.
FX?
I think, well, for FX, So I think there's two things here. There's one is you've got the blockchain world, the Bitcoin world, and you have the kind of current regulated exchange world. And it's how, one is the technology of transmitting money and stuff around the world, and the other is kind of a matching engine. It's we need both in terms of LMAX. So, and it kind of it goes back to the comment you made about reference prices. So let's say we can get over the AML issue. Perfect. We could list Bitcoin on LMAX tomorrow, no problem. And people could deposit Bitcoins with us, and people could withdraw dollars. And we're comfortable with that. Then you start saying, well, how much volume are you doing it? Then you start trading it. Then you start printing the volumes. Then people say, where's your reference price? Oh, you go to a regulated exchange in London called LMAX, and that's where your reference price suddenly, and then the liquidity comes towards the exchange. That's where we kind of see the future from us. It's not. I don't think there's the technology that the blockchain has is not. It's using that and the ability of that and creating a secondary market, perhaps a derivative where people can hedge it, and it's kind of getting into that kind of. That's where we see the opportunity. But it's joining these two worlds together, where you got old-fashioned, regulated, cumbersome financial services and fast-moving, decentralized Bitcoin blockchain, the future 16-year-olds coding, in their spare time. And those worlds, they don't fit very easily together. And it's how do we get there? And whoever gets there will win.
Interesting. John?
To answer your question around moats and exchanges, I can only speak in our circumstance. We're focused very much on the SME space. So that's generally a quite expensive customer acquisition group to go hold. They're quite sticky when you get them. So our moats would be, first of all, our patent on the multi-currency netting, regulatory, the technology of building the thing, access to the capital to be able to provide liquidity, but also to provide growth. And then it's a simple function, I think, of you getting sufficient traction. And as you get traction, then your moat gets deeper.
Yeah, got it.
And as a last point on that, I think I've seen a lot of Bitcoin blockchain exchanges, and there's an enormous difference between building a piece of technology and operating an MTF. It's the operational piece. If I end up, how much are you doing a day, daily volume?
10 billion.
So having a boo-boo when you're doing 10 billion a day is a problem. So it's about the enterprise architecture of what you build. So what I've seen in the world is lots of exchanges, and you go and you look and you're like, yes, what you've built is a great example of how you can use technology. But to take that and run a national exchange or run an MTF, the policies and procedures required to meet with the regulation are, that's why you've got 70 people. And that's the barrier is the cost, if you're going to process that much money, is the cost of the responsibility under the current regulation. So it is a regulatory
cost of responsibility. Interesting. Okay, thank you very much, guys. We're going to move to lunch now. We'll be back here at 2 o'clock with a look at authorities and moving through a whole great session of panels for the afternoon. So I hope you all stick around. Thanks very much to our esteemed panel for joining us.
Yes, thank you.